The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, weather market season is always an interesting one, always volatile, it seems, and we continue that volatility to wrap up the week on Friday with a lot of profit taking ahead of the weekend in grains and oil seeds. We're going to talk about all this here today. We're going to dive into it and have a discussion with our good friend Ted Seifried with Zaner Ag Hedge. Ted, great to have you on the show again today, buddy. I hope you're doing well.
Yeah, I'm doing great, Jesse. Thanks for having me, man. I always enjoy doing it.
Well, I'm sure you have had a busy week here just with the volatility in this weather market because, sharply higher, then taking a bunch of profit off the table Thursday and Friday here in corn, beans, and wheat. That's what it really felt like, at least anyway, to wrap up the week is a lot of folks, farmers selling, hedge pressure, whatever the case was, just a lot of profit taking in the grains overall to wrap up the week.
Yeah, a lot of profit. I hate cliches, Jesse, but I find myself using them fairly often. And longest short week ever, right? But just the last 2-3 weeks, we've had a lot of volatility. We had been going straight up based on weather forecasts just continually missing, right? I mean, very, very spotty rain. A lot of the weather guys had been calling for a big overall change in the weather pattern that seems to be just not happening, or at the very least, it keeps getting pushed back. And eventually these sort of things do change. I mean, they always do. It's just a question of when. And for corn, we're kind of running out of time pretty darn quickly in a lot of areas. So, obviously that had the market's attention earlier in the week. But then to your point, we spent Thursday and Friday dropping fairly sharply. Part of that for the soybeans was the EPA's proposals that they announced Tuesday evening. You had soybean oil limit down, and then you saw follow through on that Thursday or Wednesday night into early Thursday morning. But by the end of the day, Thursday, soybean oil had been coming back. And actually, by the end of the day, Friday, it really was finding some pretty decent strength, not taking back all of the losses, but pretty close. So really shaking it off in soybean oil. Either way, like you said, profit taking, part of it. I mean, it has been a very nice run. And in front of a weekend where we are expecting some rains, once again, hoping for those rains or the forecasts to actually verify. We're about midweek, we saw a dramatically wetter 6 to 10 day outlook. A lot of the places that had originally been looking for a quarter to a half an inch, we're now looking at an inch and a half to 2 inches possibility, fairly widespread. Time to cool the market off a little bit. And we had gotten very overbought. When you go parabolic like that, there's a lot of thin trade underneath us. And again, whatever sparks that profit taking, it can be fairly dramatic, as weather markets are. Fairly dramatic is a great way to put that.
Yeah. I would agree with you. Fairly dramatic. And, just thinking about it, it is obviously an opportunity for maybe some farmers who missed the boat on the first rally we saw here earlier in the year, maybe saying, okay, maybe I get some coverage here. And I know that's the balancing act of, well, I'm worried about if I'm going to have a crop or whatnot, but that's why we have tools in the toolbox to manage that risk. But
absolutely, Jesse. This has been a week that has provided opportunity for everyone, right?
Yeah.
It's given us, especially earlier in the week and especially the day Tuesday, it's given us the opportunity to come in and make some sales if you had missed the boat on that. But I also do understand the reluctance to make sales if A, you're not 100% sure if you're going to have those bushels, and B, it's hard to sell into a rally. From a producer perspective, it's really hard to sell, especially an aggressive rally like that. Because you think, well, if I just wait till tomorrow, it'll be higher. And then you keep thinking that. But then, Thursday and Friday happened, and I think there's probably more sales that are actually getting made today than there was on Tuesday, for that matter, or Wednesday, for that matter. But also, with the pullback that we had Thursday and Friday, well, if you're worried about being oversold on bushels, I don't know a whole lot of guys that are in that position. But if you're worried about the bushels that you have contracted not being there, well, then you got your chance to come in and buy calls to protect the upside. Or if you said, hey, those bushels are going to be there, but maybe I sold too low. My price is in the 540, 560 area. Now we at one point tickled 630. I can come back in and re-own calls to re-own that opportunity, that if this weather market keeps rolling, all right, well, now I'm adding pennies to the bushels that I've already sold. I think both of those are very viable strategies right now. So again, this week has provided all the opportunities for everybody. We are all amateur meteorologists, right? We all have our opinion on where this weather and what's going. And for that matter, I mean, the weather guys have taken a lot of heat for this. And yeah. I'm going to say it, and going back to the whole cliches thing, this is one that I use a lot, and that is predicting the future, Jesse, is a son of a bitch. And it is, right? And I feel for the weather guys because, we can have all the best tools available to us, like technical analysts, fundamental analysts. We analyze things and we try to give our best guesses of what's going to happen in the future. Well, the weather guys are doing the same thing. It just so happens that a lot of their tools are misleading them and giving them wrong data or wrong outcomes, I guess. And they've just been off or too early or, what have you. And I'm familiar with all of those things. So I feel for them. They're going to take a lot of heat for this year. They're going to take a lot of blame. I mean, people pay them a lot of money to get things right. But again, predicting the future is a very, very difficult thing. So, I get it. Where do we go from here? And that's the big question. Again, everybody has their opinion, and that's why we have markets. You can express that opinion very easily. So.
Exactly. Well, and to your point as well here, and a lot of people have been trying to draw comparisons between this year and 2012. You posted something on Twitter earlier this week that I thought was very interesting, and I want you to expand upon it for us, is the whole rationing of demand piece of this equation as well. What is the difference between 2012 versus this year when it comes to the demand picture underneath this market, Ted?
Yeah, right. And so you're right. This is a comparison not based on weather. I know people are making that comparison. I'm not saying we shouldn't be. I think in the last couple of weeks, we've found that it is actually maybe a really decent comparison. Some people still want to compare it to 92 or 88. There's other years too. There's other years. Every year is different. What my point was, like you said, is on the demand side of the equation, not the weather, not the supply. And that is that in 2012, we weren't coming from ultra low prices, but we had not really hurt the demand on the demand side of the balance sheet at that point. Yes, 2011's crop was a little bit below trend line, not a big deal. Prices were not super low, but they weren't super lofty either. The demand on the balance sheet was very strong going into the 12 growing season. And so when that crop came in short, and it was very evident that this was going to be a major problem, crop failure, well, we had to use price to go in and price out or destroy a lot of that demand. In this scenario, Jesse, you have to understand that a lot of that heavy lifting has been done by these markets already, especially in the case of corn. Look at export sales today. This same week last year, we had over 1 million metric tons of old crop corn that we sold. Today, 109,000 metric tons. That's pitiful. That's actually less than 10%. Oh my, that's a major problem. This is the time frame where we really should be selling a lot of U.S. corn. But we just don't have that global market share right now. So we've already rationed a lot of that demand. The last 2.5 years have done that. So when you have a weather issue like this, in the midst of it, in the throes of it, the market focuses on what's happening with weather. We talk about yield. We talk about the supply side of the balance sheet. What gets lost in that mix is weekly export sales like this, or just the whole demand conversation as a whole, because we're all focused on yield. What's the yield going to be? But once that conversation ultimately comes to an end one way or another, either it starts raining or it never rains and we say yields nothing and whatever. But at some point, that conversation ends. And when that conversation ends, we start to talk about demand again. And when we do, I think we are still in for a rather rude awakening. The one caveat to that, Jesse, is that sometimes when you have a weather market like this, global end users get nervous that maybe the crop isn't going to be there, and then they start to come in and buy fairly aggressively. If we start to see that, and specifically I'm talking in the case of corn, if we start to see that, then the market does have more work to do to price ration demand. But at this point, I think we're doing more than what we need to do right now. And I think producers have to understand that. They have to see this as an opportunity, because remember what happened after 12. We had a precipitous decline in 13 for corn. Beans, not so bad, but corn down sharply. And by the time we got into 15, 16, 17, 18, 19, we were languishing at really low prices with very small volume, very little opportunity to use markets to add pennies to your bushels either way. We all were, oh man, what's the future of farming? I don't know if I'm going to be able to, pay my rents and things like that. Well, and this is a situation where we have high interest rates too. So we're a lot more at risk than we were in 15, 16, 17, 18, 19. So you have to understand that. You have to understand that when this is over and we get back to that demand conversation, we say we don't have the demand, one of these days we're going to have a good crop. And then we're going to have to go on a mission of rebuilding that demand, and we're going to have to use prices to do that. The unfortunate thing about that is it takes a much longer period of time to use low prices to build demand back than it does to destroy demand with high prices. And again, this is what we're setting ourselves up for. Everybody has to understand that. We have to use this opportunity not only to make this a very profitable year for ourselves, but also let's look out into the next couple, as far as we can. Let's look out in the next few crop years, because one of these days we're going to end up with a good crop. So is South America. I mean, the Brazilian corn and bean crops have been gangbusters. Obviously, Argentina had a problem.
Yeah.
But yeah, one of these years, we're not going to have a production issue, and we are going to have an oversupply issue. We'll get back to that conversation. And then the really difficult thing about this in American agriculture is that when we get to that oversupply conversation, we don't respond to that by cutting back our production. We try to out-bushel the problem. You know what I mean? If we have low prices, we say, well, I have to grow more bushels, right? Because that's how I'm going to get to the money that I need for, paying my operating loans, paying my rents. That's what we need to farm. So then you have a perpetual problem that kind of feeds on itself, where we're not building demand fast enough, but we're also not cutting. Low prices are not cutting supply out of the supply chain. They're actually adding to it. Again, we'll go back to that cycle. So we need to understand that, and we need to be fairly aggressive and cognizant of what's going on here.
We're having a conversation today with Ted Seifried of Zaner Ag Hedge. Ted, a couple other quick things I want to ask you about here today. You mentioned the RVO stuff with the EPA affecting the soy market earlier in the week, especially longer term. In your eyes, as you look at those numbers and the impact on the market, and we think about renewable diesel and sustainable aviation fuel, et cetera, and all these new plants coming online over the next year or two, I mean, what's your thoughts with those numbers and the overall impact we could maybe see in this market?
Yeah, the big disappointment, Jesse, was that it's not biomass. I mean, we really wanted them to focus on biomass, and they didn't, right? So I think that gets better over time. I mean, if you look at their yearly schedules, it does get a little bit better, but not to the point where we really wanted to see that happen. And that's a real big disappointment for the crush, right? Crush margins have been running at very good levels for a long period of time, which has really encouraged this expansion that we've been talking about for a couple of years now, with the idea that, hey, if all these plants come online, which there's already been two that have fallen out, but if all these plants come online, that's another 700 million bushels of domestic demand that we'll have for the crush. But now this kind of puts a little bit of a monkey wrench into that situation, and it really calls into question the profitability of the crush going forward. And right now you have spot crush at the lowest level it's been in over 3 years. Really, up until about a month and a half ago, we hadn't traded below the 5-year average in a really long time, but now we're sharply below that. Front month crush has really fallen apart. I think you're going to see crush in August slow down, as we normally do. But I mean, any chance to take maintenance, I think these guys are going to, because their margins are gone. So looking out further into time, looking at that 700 million bushels of production all the way out in 2027, or building towards that between now and 2027, you really have to wonder if that's going to be there. Now, I want to say that even without RVOs, or even without the mandate being where we want it to be, I think we'll continue to produce above and beyond that. I think the sheer demand will be there, but the lack of RINs again take away from those margins. So, we're gonna have to see how that proves out, right? We're gonna have to see if these companies go forward with those planned operations or not. But again, that's the concern that the market has, is that maybe that 700 million bushels is more like 200.
Something to think about. Livestock trade, feeder cattle took advantage of corn breaking lower Friday for sure. Live cattle, hogs were a bit mixed on the day. I know on the cattle side, we got to wait and see what this cattle on feed report says after the close and what the numbers are, etc. Feels like some squaring up of positions maybe a bit ahead of that report. Any thoughts on the protein sector on Friday, Ted?
We're not really looking for much out of the cattle on feed report. But I will say this, the last one we had, placements surprised. Basically, we're looking for marketing and placements to be about the same, leaving cattle on feed very similar. More of the same. I guess if there are any big surprises, that'll move the market. But really, I think what we're watching right now is corn for feeder cattle, which, hey, feeders had obviously corn had terrible days on Thursday and Friday. Guess what? Feeders had great days on Thursday and Friday. That's how that kind of works, So,
that's how that works.
That gives you a little bit of a vote of confidence for the live cattle, because again with the cliches, this is the theme today apparently. We like it when the feeders are the leaders. A lot of times that gives us confidence that the live cattle can follow. But then there's the other thing that we're watching in live cattle, and that is the domestic demand. We have seen box beef prices cool off fairly dramatically since the beginning of the month. And we've seen pork cutouts coming up really at the same time, suggesting maybe there is a bit of a shift happening at the butcher's counter. Maybe. The other thing is that cash has kind of cooled off a little bit. Part of that's because of the box beef prices coming down, but also, packers were really aggressive getting themselves bought going into the very peak summer weekend of peak demand, which is the 4th of July holiday weekend. It seems like they have covered their needs for now. So then, the question is, where does cash go from here? Now, we are still trading at a very large discount to cash. So I think there's not a whole lot of downside potential here unless cash really starts to fall, which, again, I'm not really feeling that unless we are seeing a massive shift at the butcher's counter towards pork or other things. I don't feel that way. But to get it to go and make a new high, I don't know if that's going to happen. We're going to have to see domestic demand come back hot and heavy, and that might not happen until we get into Labor Day. A lot of times we get into these summer doldrums after the 4th of July. We kind of slow down on our grilling activities and things like that, and then we pick it back up at the end of summer. So I'm not ruling out the idea of new highs in cattle. I'm just saying for right now, cash is cooling off, so we have to kind of expect that the futures have and will kind of cool off a little bit as well.
Great thoughts, Ted. Before we let you go, floor is yours. Anything final you want to mention or reiterate for folks today?
I mean, it's great to see hogs bouncing off the lows, right? And it's great to see some of that demand coming back in for hogs, and even on the export demand side as well. I think hogs continue to go higher. Yeah, we had a bad day on Thursday after we ran into a very key moving average after a sharp bounce off the lows. We'll see. The other one is crude oil. Crude oil had a really terrible end of the week. We're worried about, global economy. We're worried about demand. We're worried about oversupply. There's Nigerian crude that doesn't have a home right now. Longer term, I think crude still has to go higher. We still need to fill our strategic oil reserves. There's demand out there. People are moving around. I don't know. I'm bullish crude in the longer run. It's had fits and starts getting going. I think from a producer perspective, it keeps giving us opportunity to kind of hedge against the upside of a run for what we're going to need for harvest or even next spring. I think you need to be looking at that as an opportunity too, because trying to control your variable costs right now, I think, is a very good thing, especially when we've had this rather aggressive rally in corn and beans. I think you've got an opportunity between those two things right now to really kind of solidify some margins for this year.
Well, Ted, if folks need some advice, figuring out things with their marketing plan, I know they can reach out to you there at Zaner Ag Hedge. How can they get a hold of you?
Yeah, you can reach me directly at 312-277-0113, or you can find us on the web at www.zaner, that's ZANER.com. You can read a bit about us. We also have bios and things like that. Sign up for an account, whatever you'd like to do. There's an area to send me questions as well. And then also, if you're on the Twitters, I'm at the Ted Spread.
We appreciate the time as always. Ted Seifried, Zaner Ag Hedge. Thanks for joining us, my friend. Have a good one. We'll talk to you soon.
Thanks, Jesse. Always a pleasure. We'll talk to you soon, buddy.
That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.